Offshore wind lease cancellations. Draw environmental, legal pushback. Environmental groups and lawmakers push back on $885 million in federal payouts. The Interior Department's deals with Blue Point Wind and Golden State Wind have drawn criticism from environmental advocates and Democratic lawmakers who say the agreements remove critical clean energy capacity, put state-level clean energy commitments at risk, and raise unresolved legal questions about the use of federal funds. The Department of the Interior, DOI, announced on April 27 that Blue Point Wind and Golden State Wind had each agreed to voluntarily end their offshore wind leases in exchange for dollar reimbursement, following the model of its March agreement with Total Energies. The three deals together represent approximately $1.885 billion in federal lease reimbursements, conditioned on equivalent investments in LNG facilities, oil and gas assets, and related conventional energy infrastructure. Both Blue Point and Golden State are co-owned by Ocean Winds, a joint venture of EDP Renewables and Engie. Under the Blue Point Agreement, Global Infrastructure Partners, a part of BlackRock, committed to invest up to $765 million into a U.S.-based LNG facility, after which Interior will cancel the lease and reimburse the original bid amount. Golden State Wind, a joint venture with the Canada Pension Plan Investment Board, is eligible to recover approximately $120 million in lease fees following an equivalent investment in Gulf Coast oil, gas, or LNG assets. Both companies have committed not to pursue any new offshore wind projects in the United States. What environmental advocates are saying about the Golden State Wind and Blue Point Wind cancellations. The Environmental Defense Fund, EDF, issued the most detailed public response on the California deal. Michael Colvin, director of EDF's California Energy Program, said the administration was spending taxpayer funds to obstruct projects the state had already invested in. Instead of allowing much-needed homegrown power to get built, the Trump administration is wastefully spending taxpayer money to pressure a company to walk away from it. Obstructing clean energy projects is not energy dominance. It makes us weaker and more reliant on unpredictable fossil fuel markets. EDF noted that Golden State Wind had been expected to power approximately 1.1 million California homes, and that the project carried $24 million in committed workforce training and domestic supply chain investments. California's offshore wind sector had been projected to generate roughly 8,000 jobs. Colvin also raised the regional dimension. California is the gateway for many states to access offshore wind. Blocking it here will lead to even higher electricity costs and more pollution for millions of Americans in the West. Environmental groups and Democratic lawmakers have more broadly questioned the legality of the Total Energies agreement, which served as the model for both subsequent deals. No legal challenge had been filed publicly as of publication. But the pattern of agreements, each structured as a dollar-for-dollar reimbursement in exchange for conventional energy investment commitments, has drawn scrutiny over whether the deals represent an appropriate use of federal lease revenue. Democratic lawmakers' response to the Blue Point Wind cancellation in New York and New Jersey. Senate Minority Leader Chuck Schumer called the Blue Point Wind cancellation a reckless decision that hurts working families and the economy, and said it would likely increase electricity prices in New York. Blue Point had been in early-stage development off the coasts of New Jersey and New York, and each project was projected to power more than 1 million homes when complete. With the Bureau of Ocean Energy Management, OEM, slowing new offshore wind leasing activity and revisiting federal offshore wind priorities, any future developer seeking to build in those areas would need to acquire new leases through a process that does not currently have a clear pathway. How the offshore wind cancellations affect state renewable energy targets and grid planning. The cancellations carry consequences for state-level planning that extend beyond the individual projects. California, New York, and New Jersey had all integrated offshore wind capacity into their long-range clean energy and grid reliability frameworks. For sustainability and energy teams tracking renewable energy supply for procurement purposes, The removal of this capacity from planning scenarios means that grid build-out timelines in these regions are likely to shift, and the supply of large-scale clean energy contracts in those markets will be more constrained than projections from 2 years ago suggested. EDF's Colvin specifically cited the West-wide day-ahead electricity market taking shape as a context in which offshore wind's removal becomes a regional, not just a state, planning issue. As Western states work toward market integration, California's offshore wind capacity had been expected to serve as an exportable clean energy resource. Its absence affects supply assumptions across state borders. The administration framed the deals as advancing energy affordability and reliability, with Interior Secretary Doug Burgum arguing that the offshore wind leases were only viable under subsidy conditions that no longer applied. The companies themselves described the agreements as providing capital allocation clarity. You've been listening to Sustainability Soundbites by Environment and Energy Leader. For partnership opportunities, please reach out to our team.